Good afternoon, traders, and welcome to today's Hot Stocks Outlook for September 29th, 2017. As always, hope you're having a great week out there in the markets, making a lot of money with your trades. And we really have a very fun market. There's a lot of equities which are in very strong trends, really aggressive moves. And when you have a tool like the VantagePoint software, it makes it very easy and really have a methodical trading process in place as you're really looking towards doing the same thing day in and day out, utilizing the exact same tools on the market, whether it's long or short. But let's go ahead. We'll start here in Grainger. We're going to revisit Goodyear Tire, which we touched on last week. We got precious metals and a couple other things to look at. But most importantly, of course, is the process. How do we identify these sort of opportunities? So here in Grainger, we have daily bars and candles. This is all the price data, works off of end of day data. And what we're able to identify is a really strong crossover back here at the beginning of September. And what this is actually a comparison between this black line, which is a regular simple moving average. So really no benefit. You're getting a very simple calculation that summarizes what's already occurred in the market. But we compare that to a predicted moving average. And that's generated via the artificial intelligence and neural networks found within this VantagePoint software. So when we compare these values, we essentially have a forecast of what direction is this market expected to trend in. So we know the trend is up. We'd want to look to go ahead and get long the market. But we have a couple of other cues that really work here to really round out the forecast as far as how this software works day in and day out. And what we have here is the predicted neural index. Now, this indicator is extremely accurate, but it's very short term in that it's only looking 2 trading days ahead. So it's looking ahead 48 hours and determining, is there that short-term strength or weakness in the market so that you can adjust and adapt, improve your entry, be buying on dips. And when you know what to expect, you can prepare that much better. And that's really the key here, is being prepared for these markets. So what traders are able to identify is, okay, well, look to get long, and we're going to look towards those predicted lows. Very simple. Just look towards the predicted low level for an intraday entry. And that means that you're coming in and trying to buy at these levels. So you get filled there with a limit order. Nothing happens here, but you see we come the very next day in that 2-day window, you come and hit that level. We sort of adapt. You see, buyers pushing that level up, but really great entry into what is an uptrending market. So without a doubt, just a really nice entry, and really the analysis is done for you there. So about a 12% rally from those points. But what I really want you to do is understand that, even 100 shares here, you made about $1,900 on the way up. But let's say you're a shorter term trader and you want to look for, shorter term opportunities. Well, you're going to keep a keen eye on the neural index here. And you really look what happens here. The trend is up. The neural index goes down to a 0. So you expect weakness over the next couple of days, but the trend is up. So that's sort of the guidance and help that you can get. So instead of getting out of the market when the market is, really looks very weak and hitting these lows, you've got orders ready to buy that market and trade this rally higher, trend the trade up. So as we roll this forward again, take just another peek at these predicted lows. Even as this market moves forward, great entries intraday for those shorter term traders to go ahead and exploit that shorter term move in the market. So really nice opportunity there in Grainger, over 10% move higher. But let's look at Wheaton here. And we've seen this all throughout the silver and gold miners, the silver and gold market. But crossovers coming through middle of September, around September 11th. You see crossover to the downside, neural index at a 0 here. And utilizing this technology, really the same approach, it's very simple. You want to short at or near predicted highs, and you see how this works. You're shorting at this level, almost a perfect entry into this continuing downtrend that you identified. You get another really nice entry here. You see we come up pretty close to that predicted high there, but another great entry into that downtrend. So when you're making sure that you're utilizing this technology and only trading really at these levels or really having a process in place, you're going to be very efficient as a trader, because you go ahead and short within this downtrend. That is a really nice entry that's almost immediately in profit intraday and getting ready to make you a really nice return as that trend continues. So really great opportunity there in Wheaton Precious Metals. We've got this market still trending lower and a lot of this sector looking weak, but about an 8% move to the downside in just the past 12 trading days, a very short period of time. Here in Goodyear, I just wanted to revisit this market where, the hot stocks outlook, we make this video about right here. And what we were doing is really covering this really nice rally we'd gotten in Goodyear Tire, but we'd seen this all over in Spartan Motors and Ford Motor. We're seeing even Harley Davidson do very well now. So about a 7% rally over that time. But what I want to do is, again, really mention to the shorter term traders who want to make sure that they're efficient, only trading markets where they should expect that strength or weakness in the market. We'll look at these predicted low levels. I mean, not only are there great entries as this trend moves higher, but just over the past week, almost a perfect entry into this market. You go ahead, take a long position. And once that neural index gets bearish, if you're specifically shorter term, that gets you looking to go ahead and take some profits on this move and try to buy back on some weakness over the next couple days. So, just this past week, you got about 2.8% as a short-term trader buying up Ford down at 32, selling well above 33, then maybe trying to buy back low down in a 32.80, 33 level near these predicted lows again. Not a bad strategy, but this is the whole point, is that as you roll forward through trades, you need something that's going to adapt for you, because the plain reality of it is, back here in the market all the way at the end of August isn't the same as it is towards the end of September. And we want our tools to be adapting and adjusting so that we can, really exploit these opportunities. Really, as a short-term trader, almost 3%, just within a few trading days, taking a chunk out of the market and really improving your position in that uptrend. Let's take a look at Rockwell Medical here. And again, going to sound like a broken record once we get through 4 or 5 charts, because it really all works exactly the same way, regardless of the markets you're trading. So, here we got a little crossover there, a much cleaner, obviously, crossover from this point. But look at the neural index. I mean, without a doubt, forecasting strength in the market, saying, go ahead, look to be long Rockwell Medical here. So sure, you can go ahead, get long at the crossovers, but of course, we want to get that good entry price, bring up those predicted highs and lows. And you see just how effective this is. That, it may not be the first day you, after that crossover, you don't get picked up, but that works out because you don't want to be buying up at high intraday levels. Here you buy at this really great intraday low. You don't have to run, huge stop losses, but already about an 18% rally higher from that point. A little bit more from the crossover, about 22% if you get in right after that crossover with that neural index strength. So just a huge opportunity there. A 22% rally in just 8 trading days. So, this is what I mean by there just being a ton of volatility, really exciting markets to go ahead and get involved in. Last opportunity here we'll take a look at is Sturm, Ruger and Company. RGR is the symbol, but very simple here. Crossover to the upside was indicating you need to go ahead and get long the market. And what I love about this is when you have a process in place and an approach, really find yourself in the right situation. So if you understand you want to be long the market, you've gotten that crossover to the upside, you also understand, hey, we want to look towards predicted low levels to buy. Well, really great predicted low, almost perfect entry into this market 2 or 3 days before this big explosion in price. So even after you get that, really absurd volatility, you see how these levels adapt and adjust and really keep you on your game so that you can keep, adapting and evolving with those changing market conditions. Because just the reality is again, after you get, a 15, 20% rally over one day in the market, you want to be able to adjust those intraday entries, those shorter term entries and fills, and how you may adjust that position moving forward. And you see that that's what this software really does. You see, neural index forecasting some weakness, saying, okay, look to buy on this weakness over the next couple days. But without a doubt, that uptrend is very strong still and in place. All you can do is go long the market. So really great opportunity there. So thank you guys, of course, for watching. This is all we got for today. But of course, go ahead, leave some questions or comments if you have any questions about how this approach works. I mean, best of luck to you out there in the markets. Thank you all for watching this video. This has been this week's Hot Stocks Outlook. Best of luck, guys. Bye for now. Thanks again.